Hey everyone, so this video is about the book A Random Walk Down Wall Street, written by Burton Malkiel. And Burton Malkiel is an American economist who got his MBA from Harvard and he got his PhD in economics from Princeton. And so this book is all about investing. It's a very comprehensive book, but in this video, I'm going to explain some of the main points that he talks about in his book to hopefully give you some insight on how you can become a better investor. So straight from the beginning of the book, he talks about one concept and one concept only, and that is to buy and hold index funds. So you want to buy and hold index funds. So that basically means that you want to buy these funds. They're called index funds that track certain stock markets, and you want to buy them and just hold them for a long period of time. And he talks about that from the get-go, and in the book he basically proves why this is the case, why you just want to buy a group of index funds and you want to hold them forever. So that's point number one. The second point is that because markets are efficient, that you statistically can't beat the market. No fund manager can beat the market, well, consistently beat the market. And so that's why he's saying you just buy an index and you buy and hold it for a long period of time, because no one can really outperform the market because it is very efficient. So that basically means that they correct when necessary. So the market will always correct at some point in time. And so they're very efficient, so there's really no point in trying to quote unquote beat the market. Okay, and then number 4 is to hold a diverse portfolio or diversified portfolio. So basically with index funds, you can get many sorts of products or financial securities. You can get securities that track the Dow Jones, or you can get securities that track the S&P 500. Those are American stock markets, and or the Canadian stock market, which is the Toronto Stock Exchange. You can get these indexes that track these stock market, these stock markets, and so that's what he's saying. So you want to have a diversified portfolio of equities or bonds that track these markets. So that's number 4. And then the 5th thing that you want to do is that basically savings is vital. So saving, the amount that you save is vital to your ultimate net worth. Now he's saying that if you save, that's going to yield you more than if you get a certain return on your investment. Yeah, it's great to have high returns on your investment, but you can only grow your investments so much with what you have. So example, a 10%, even let's just say 100% growth on $1,000. That's not, that's going to give you at the end of the day a $2,000 net worth over 1 year, right? But if you consistently save, example, and you save let's just say $10 a week, right? It's going to give you about $520 versus the 100% return. But if you consistently did that over the period of time, that's going to give you greater returns. So that's going to be the significant factor in your net worth. So it's not necessarily the returns that's a contributing factor, but the ultimate factor to what your net worth will be is how much you save. Okay, so that's number 5. The 6th thing is that stocks outperform bonds. So usually, historically speaking, the longer you hold stocks for, the greater the probability that they'll outperform bonds. So he has this chart where he shows you the holding period of stocks and the percentage or the likelihood of them outperforming bonds. And so he shows that over the course of 30 years, you have, I think it's like a 99% chance of stocks outperforming bonds. And so basically, the longer you hold stocks, the greater your returns are compared to bonds. So if you're thinking about, oh, should I buy bonds or stocks? Well, it depends on your holding period, right? Okay, so that's the sixth thing. The seventh thing is in terms of what to buy, you have to think about your life cycle. So you need to think about your life cycle. So where are you in your life? Are you old? Are you young? Are you middle-aged? So each person will have a different objective with what it is that they want financially. So someone who is about to retire will have different objectives than someone who is young. So Burton recommends that if you are young in your 20s, then you should have somewhat of an aggressive portfolio compared to someone who is a little bit older, wanting to retire. Then they should look for certain indexes that may pay some sort of dividend or some sort of payment every month. So that's something that you have to consider in terms of building your portfolio and the weighting of what you're going to allocate to what. So it depends on your life cycle. In addition, he calls it the sleep method. So basically, if whatever you put into a certain thing and you're able to sleep well at night, knowing that even if you lost it all or if it went down 50% or whatever, and you're still able to sleep, then you're good. It doesn't matter what age you are. So that's another method he talks about. It's if you are able to put your money into a certain fund and you couldn't care less about it when you're sleeping, then you're good. All right, so that's the seventh thing. And then the last thing is, well, that's 2 points. So number one, you want to find index funds that are low cost and have low turnover, right? So you want to find index funds that are really cheap to purchase and that aren't very traded often, because those two they will contribute to, or those are two big factors in how well the fund will perform. So if you have someone who is constantly trading, the fees on trading is going to eat out of your profits. And that's the same thing with management fees or low cost. So the more expensive it is to manage, the less you have at the end of the day. So those are 8 points about this book. Definitely check out this book if you're interested in learning about investing. It's very comprehensive. Towards the end of the back of the book, it talks about a little bit about personal finance and how you can better prepare yourself depending on what stage of life you're in. And I would recommend this book to anyone who is interested in learning about the stock market or learning to become a better investor. But yeah, well, anyways, I hope you enjoyed this video, and if you did, please give it a thumbs up. Check out my website at www.bookstakeaway.com for other books I've talked about, or to watch other videos that I've done. And hit that subscribe button if you are interested in getting notifications of future videos. And yeah, thank you for watching. And if you're interested in the book, there's a link down below. And yeah, I'll see you next time. Bye for now.